Thank you, Mr. Speaker. I'm very pleased to stand and speak in support of the Financial Reporting Bill at the second reading. Thank you to the previous Speaker for his comments regarding the Select Committee process, which I believe worked very conducively to see some very important changes take place in this. Thank you, Mr. Whip, in this bill. One of the aspects that I want to touch on in terms of the Select Committee process was how we received a number of submissions, quite a considerable amount, regarding the charities sector and the not-for-profit entities. Because, Mr. Speaker, many of these entities, essentially charities, run on the smell of an oily rag, so to speak, and it's important, as the previous Speaker so rightly said, that they are accountable to their donors, but at the same time we don't want to encumber them with such expensive accounting requirements that the probably too great a proportion of their receipts are spent on that administrative burden. So finding the balance was important, and the committee, in receiving many submissions, came to the place where, in terms of the difference between a cash set of accounts and accrual set of accounts, that we lifted the threshold that was stated in the original bill for a cash basis set of accounts from 40,000, the threshold from 40,000 up to 125,000. And essentially a charity, a church, whatever, that was able to employ a full-time worker or minister would generally have an income of around about 100,000 plus, perhaps a bit more, and may not have the administrative support when they have that level of income required to do an accrual set of accounts. And the difference essentially between a cash set of accounts and accrual set of accounts is that accrued revenue is revenue that's incurred or recognised before the cash is received, and accrued expenses are expenses which are recognised or incurred before cash is paid out. So it's actually quite complex to create a set of accounts, and often needs a professional and often also an auditor to check on the work that's been done in that regard, as opposed to just cash in, cash out, which is far more simple. It's essentially, there's many software packages that run in the vicinity of $100 to $200 that handle cash book accounting very, very proficiently. And so we felt that once a charity organisation was receiving an annual income of greater than $125,000, that they were a reasonable size entity that was probably incurring a reasonable size of accrued expenses or revenue, whether that's interest or whether that's perhaps an invoice on maintenance of a property they own, whatever, that the members of those organisations, when they are in that vicinity of income, probably do need to have a more thorough set of accounts. So we worked through that process. I think there were some submitters who wanted that threshold to be higher, but we felt that that was a reasonable balance to find. Sir, the intention of this bill, if I just come to a close now, is to rationalise the financial reporting obligations by doing a number of things, apart from what I've just mentioned. It's aligning such obligations with the goal of financial reporting to provide information, obviously, to external users, to members of societies, clubs, charitable organisations, but also shareholders and the like, who need an entity's financial statements but cannot demand them. It also serves to standardise the interface between the Financial Reporting Act and other acts by setting out core definitions and provisions with broad application to reporting entities in a new Financial Reporting Act. And it makes, I think more importantly, sir, it makes the language of financial reporting consistent in all the pertinent acts. So it's harmonising such terminology so that it becomes understandable and becomes a useful document to people. So, sir, I'm very happy to stand in support of the Financial Reporting Bill. Thank you to the members of the Commerce Select Committee for your cooperation in getting this through in a timely way. I think this is going to be of benefit to organisations throughout our country. Thank you, sir.
Mr. Speaker.
Dr. David Clark.
Thank you, Mr.